Okay. Okay, so the residual value of 10,000 and 4-year life. The company charges depreciation monthly on a straight line basis. What will the charge for depreciation be for the year to 30th of June 2015?
Okay, so that is, what is that? Let's looking at what? What's the topic?
Depreciation.
So how do you approach a question like that?
Timeline.
Exactly. Okay, so
I was just confused because they didn't give us a percentage. Do you know what I'm saying?
yeah, but they gave you 4 years.
Okay,
so a company purchased a lorry. So let's write down the date: 1 Jan. What is it? 2015. Okay, so on 1 Jan they bought the timeline. That was the start. Okay, it has an estimated residual value. Okay, so residual value when though? 4 years later. So 4 years end. Okay, the end is 10,000 residual date 4 years from now. So January 15. So 16, 17, 18, 19. So 16 will be 1, 17, 18, 19, yeah, so 19 is right, so Jan 19. Okay, what else? Residual value is 10,000. What else did they say there? 4 years we got. The company charges depreciation monthly on a straight line basis. Okay, what will the charge of depreciation for the year to 30th of January 2015 be? Okay, so if it's 30 Jan, where would that be?
6 months.
Yeah, so that's here, asterisk, 30 January.
No, June.
Yeah, 6 months. 30 June 2015. So January, February, March, April, May, June is 6 months. Right, so all you have to do is just multiply. So what was the cost? 50. So I need to put 50 here. 50,000. A company purchased a lorry for 50,000. Okay, so there's 50,000. Okay, so depreciation 50,000 times, what is the rate? No rate, they gave you 4 years, divide by 4. Divide by 4 times by pro rata depreciation, 6 months, 6 over 12. Okay, so 50 divided by 4 times 6 over 12, 6250.
Okay, I just need to see what I can't see what you're doing. Okay, so you said
6250. Morning.
Are you well?
Yes, fine, thanks.
Thanks, good.
I know Brittany wants to chat. Okay, so that's the answer. Is it there?
Okay, but I don't know how you got there.
Okay, so it's pro rata. I drew a timeline and then I applied the 4 years. Okay, because 4 years is what? It's divide by 4 or times 25%. Okay, because 4 years is how many percent a year? 25%. 25 plus 25 plus 25 plus 25 gives you 100.
Okay.
That's all.
Okay, so if you had to, your calculation would be 50,000?
It's there.
Okay.
Divide by 4 times 6 over 12. Do you have a calculator here? I just want to see what root 2 is while you're busy writing that down. Finished. Okay, next. Question 3. What did you get?
Okay. This also, I tried to do calculations. So the opening net book value of a motor vehicle was 150,000. During the year, a motor vehicle was sold for 26,000. There was a profit on disposal of 2,000. Depreciation is calculated at 10% on opening net book value. The closing net book value was 145,000. What was the cost of the motor vehicle purchased for during the year?
Okay, so important is what are they focusing on?
I don't know.
Book value. What is book value?
Opening value.
No, book value
carrying value
is what the current value is of the asset that you've got that's being depreciated. So here they said opening book value, so book value or carrying value, BV/CV, BOY, beginning of the year, that's what they said, was how much? 150. Okay, next, during the year, a motor vehicle was sold. Okay, so sold, asset disposal. So less asset disposal. Okay, the asset disposal was for 26,000. So 26,000 was during the year the motor vehicle was sold. Okay, so if it was sold, that's the proceeds. Proceeds are how much? 26,000. Okay, that's proceeds. That's not carrying value. So that we need to work out. There was a profit on disposal of 2,000. Okay, so profit on disposal means you sold the asset at more than what it was costing. So profit on sale. Profit on sale is how much? 2. Okay, so if profit on sale is 2,000 and the proceeds are 26, that means the carrying value or the book value is the difference. 26 minus 2, 24. What else? The profit is 2,000. Depreciation is calculated 10% on the opening book value. Okay, so opening book value means that's the starting balance and it's 10%, so it's carrying value, so it's diminishing balance. How much? 10%. That's it, eh? 10%. And that's all they gave you. Oh, they did give you something else. Closing balance, eh? Okay, so CV/BV end of year equals. What is it? 145. Okay, then they said what was the cost of motor vehicles purchased? Okay, so they want to know what you bought, which are the additions, and that's the question mark. Okay, so beginning of the year is what you started with, end of the year is what you had at the end, and then you're obviously looking at the movements.
So what was the asset disposal?
Well, we don't know, we need to work it out just now. Okay, so this is the start, that's the end. Okay, so I've read everything, I've made a note of everything. 150 was the start, sold for 26. If you sell something for 26, the 26,000 is the proceeds, which we had. Then they said it was sold at a profit, so we know what that is. So the book value was 24. Okay, so less the asset disposal, that would have been 24,000 here, minus 24. Okay, then obviously additions is what you're looking for, and then you ended with 45. So it's 150 minus 24 plus X gives you 145. Then solve for the missing figure. Solve for the missing figure. Okay, so solve. Okay, so what is the figure here? Well, 145 plus 24 minus 150 to work backwards to get the basic figure. Minus 150. Okay, 19. So let's check if that works out. So 19 is the additions. Right, so if I take 150, which is what I started with, minus what I sold, plus what I bought, gives us how much? 145. Okay, there's the sum, 145, so it's right.
So, what is the cost of the motor vehicle?
The cost of motor vehicles purchased during the year, 90,000.
That's not sure. Oh, wait. Yeah, no, it's not sure.
90,000. Let's work it out differently then. Let's work out the cost and the accumulated. Then let's split it. Okay, so cost and then accumulated depreciation. Let's work it out for this one as well. Okay, cost, carrying value, cost and accumulated depreciation. Okay, so the proceeds, let's just read it again. They said sold for 26. Profit was 2. Okay, so that means if you sold something, you sold it at 26,000, and if the carrying value was 24,000, the profit on sale would be 2,000, yeah, because you've got, so you sold it at 26 and it's worth 24, so the profit would be 2. So 24,000 is the carrying value of the asset that you've sold. Was it for the asset that we sold or for the assets that we still have? What was the cost of motor vehicles purchased? Yeah, it was just the purchase, so it's just the additions. That's all. So this is the PPE note. It's just the working for the statement of financial position. Okay, we did one similar. Let me go show you this one. Where is it? This was the cost of maintenance. Let me just show you the one that we did before. Where's that opening balance, closing balance? Here. There's it. Okay, opening balance, less depreciation, less carrying value, book value, add additions. But that's the formula. That's what you have to use for property, plant, and equipment. Right, so it's the same thing here. I'm just using what they've given you. So they've given you an opening balance of 150. Would it be possible to work out the cost and the accumulated? Well, then they need to give you a rate, and they don't. They only give you, let's just see, do we leave anything out? Opening book value, got that. Motor vehicle sold for, got that. Profit, got that. Oh, yes, here, 10%. I think this one we didn't read. Depreciation is calculated at 10% on the opening book value. Okay, so we still need to put depreciation. Right, so we had addition, that's fine. We didn't read that one. Depreciation. Okay, we left out that point. Right, so 10% on the opening net book value. So what is the opening net book value? 15,000. So depreciation would be 15,000 times 10%. Okay, so 15 times 10%, 150,000 times 10%. So negative 0.10 gives you 15,000. Right, so now we need to change this working because now you have another figure to account for, question mark. Right, so we need to adjust that working. We now need to include the depreciation, so add 15,000. Okay, so now it's 34. Yeah, B. Okay, so yeah, just cover all the information, all the points in the question. We didn't read that one. Points, the depreciation at 10%. Okay, now we did, now we get it.
Okay, so let's just revise that because I'm very confused. So what was your actual calculation? You took
book value, yeah, and then adjustments. So to simplify that, book value, beginning of the year, adjustments, book value or carrying value, whichever one, end of the year. Okay, that's it. So the adjustments is what's happening during the year. So what happens during the year to your assets? You either sell some, you either buy more, or you depreciate them. Okay, so those were the adjustments. Here's adjustment number 1, disposal. 2, depreciation. 3, additions. Okay, what did you have to work out? The additions.
So you took 150,000. 150,000. So then what did you do after that? You took 150,000, then you less asset disposal. Is that what you did?
Yeah, I'm doing this in a working because they've given me information.
Me, what did you do after 150,000? You said minus asset disposal.
Yeah, I read the question, so that was the next thing that we read, so we wrote it in.
So you minus 24,000.
Well, remember the book value.
What the calculation is.
Yeah, so remember the book value is what you start with, so 150. Okay, that was what they gave you in the question. The book value at the end was how much? 145. That's what they gave you in the question. And then the adjustments was the question mark. That's what you had to work out. So we're looking at all the adjustments.
But I'm asking you what you did.
Yeah, so this is adjustment number 1. That's adjustment number 2. That's adjustment number 3 for the question. Right, so
what
this...
What did you do after 150,000?
I even worked it out here. Okay, so what did I work out? I read this. Okay, so let's start again. Because you didn't follow that. So let's start again.
Yeah, because you erased everything.
I don't erase anything. Cost, book value, beginning of the year. Okay, so let's read the question again. The question says, the opening net book value of motor vehicles was 150. Where are we going to put that?
That's your opening value.
150.
So my question is, what did you do after this?
Okay, I read the question. During the year, the motor vehicle was sold for 26,000. There was a profit on disposal of 2,000. So what did I do? Less disposal. That's what I read. Less disposal. They told me it was at a profit of 2,000. Okay, so if the profit is 2,000, what are we going to do? Work out the carrying value. Okay, so how am I going to work out the carrying value if I know the profit's 2,000? And I know I sold it at how much? 26. Okay, so the proceeds are 26 and you made a profit of 2. What's the carrying value?
24.
Okay, so what are we going to do with the book value? We're going to insert it. So it's minus 24,000. Why? Because you had a disposal of 26,000 proceeds, profit on the disposal 2,000. That was bullet number 2. That's what we did. We read line by line and then we're putting in the workings where we need to.
Can you make your font bigger, please?
Okay, happy with that?
Yeah.
Right, now what did they say? Okay, this one we didn't read. This is the one that we had to go back because we didn't get an answer that was there. So now let's read it now because that's line number 3. Line number 3 said, depreciation is calculated as 10% on the opening book value. So what did they say? 10% on what? Opening book value. What is the opening book value?
The beginning of the year.
Exactly. So opening book value was 150. So depreciation is what? 150 times 10%. Okay, so 150 times 10%. 15,000. Okay, line number 3. Depreciation is an expense, so minus. Okay, line number 4. The closing net book value was 145. What are we going to do with that?
That's your closing.
Yeah, so that's after all the adjustments. So that's right at the end. Book value or carrying value, it's the same thing. End of the year is 145. Right, so that's the end book value. What did they say? What was the cost of motor vehicles purchased during the year? So there's additions that you don't know that you're going to have to work out. Okay, so is it possible to work out this missing figure?
Yes.
Okay, so what would you do to get that missing figure? You have to work backwards. So that's the end balance, that's the total. That's what you end up with. So additions will be 145. Okay, if I'm subtracting, I'm going backwards, so I need to add it back. So add the 15. Okay, add the 24. Right, and the answer that I want is the 150. That's maths. That gives you 34. Okay, got that.
No.
145 is the last bit. Okay, theory looking at set off. That's the next question. The question says Ryan sells goods on credit to Summit. So if Ryan is selling goods on credit to Summit, Ryan is obviously the business. So Ryan, business, selling goods to Summit. Okay, so if Ryan is selling goods to Summit, if we're looking at things from Ryan's perspective, if Ryan is the business, then Summit would be what? Debtor or creditor?
I said creditor.
If you sell goods to a business, they are your customer. Customers that buy on credit are called debtors. Right, then the question goes on, and what else does the question say? It says, okay, Summit also supplies goods to Ryan. So now you've got the scenario where Ryan is also buying goods from Summit. Okay, because they said that. They said Summit also supplies goods to Ryan. So if Summit's also supplying goods to Ryan, from Ryan's perspective, Summit is what? No, in this one, if Ryan is buying goods from Summit, okay, so Summit is also a supplier. Let's use what we wrote down, supplier, which is a creditor. Right, so that's what we've got. You've got this and you've got that. So now you know that Ryan and Summit have a relationship where the one buys from the one and the other buys from them as well. So it's basically debtors and creditors together. Right, so what they're saying here is, can you set off the two? Yes, you can. They say, in which books of prime entry is the set off recorded? Okay, so let's use some figures just to understand the set off. Right, so let's assume Ryan bought 500. And let's say Ryan sold, actually. Okay, that's the sale. Sold, so sell 500, and bought, let's say 250. Okay, so he's buying and he's selling. Right, so if Ryan bought 500, sold 500 and bought 250, obviously there's the net amount left over. Okay, so if Ryan is buying from his supplier, let's do the buying first, because you would buy and then you'd sell, hopefully. So debit the inventory, credit the creditors. Okay, and then you've got the debtor, which is the sale, debit the debtor, credit the sales. Okay, so I'm debiting debtors, I'm crediting creditors. Okay, for Ryan. Okay, that's Ryan's business, that's Ryan's perspective. That's in Ryan's books. Right, so if I'm looking at a debit balance of 500 and I'm looking at a credit balance of 250, right, what is that going to give us? A net amount. Okay, so the net amount, which is what we said here, is set off the one amount with the other. The one amount with the other. Okay, so what do I mean by that? Well, if you are owing, okay, 250 to a supplier, but then they've bought from you for 500. So meaning you owe them 250, they owe you 500. Can you set off? Yes. Right, so basically, if we have this scenario, our customers owe us more than what we owe them. Okay, we've only bought 250 from them, but they owe us 500. So the net amount is 250 because you've set off the 250 with 500. Right, so the difference is what's actually been owed. Right, so what am I going to do? I'm basically going to debit creditors to remove the 250, and I would credit the debtors to reduce it by 250. Okay, that would be the set-off. Alright, does that set-off affect bank? No. Does that set-off affect debtors and creditors? Yes, but there's no purchasing or sale here. Alright, so it would be an adjusting journal entry in the general ledger, general journal. Okay, so it'll affect the general ledger. So general journal is fine. Yeah, in Ryan's books and in Simon's books, both would be the general journal. Okay, both would have to correctly set off the amounts. Okay, what's 5 looking at?
The bookkeeper compared the business bank statement with the cash book. He then updated the cash book and finally prepared a bank reconciliation statement. Why was the bank reconciliation statement prepared? I said A, to ensure no transaction had been omitted from the cash book. B, to establish the value of unpresent checks. C, to explain the difference between the cash book balance and the bank statement balance. And D, to find out if any checks had been dishonored.
Okay, so that's a pure theory question, right? Okay, so now we need to remember what the purpose is of a bank recon. Why do we do a bank recon?
To see if we've missed out anything.
Not only we, because we could have missed something out. What happens if the bank leaves something out? Okay, so internal versus external records. Okay, basically it's checking. Right, so you're checking your books, you're checking their books, and you're seeing, do our books align with the bank? Does the bank statement have everything that we've got in our books? Right, so if you have internal records, what are your internal records? Bank, general ledger accounts, which is the T account, and the journals, the cash receipts journal and the cash payments journal. Okay, I think they use cash book receipts, cash book payments. It doesn't matter, it's the same thing. It's a book for receipt and a book for payments. It's what you're recording. Okay, so the name could be different, but that's what you've got. Okay, so internal is what? What we capture in our records. External is what? The bank statements. Right, if there are discrepancies in our book, what are we going to do? We're going to change so we can adjust our records. If there's discrepancies in the bank statement, what do? Do I adjust?
Yeah.
In the bank statement? I don't adjust, I reconcile because they need to adjust. Can you change what's in the bank statement? No. Okay, the bank needs to do that. So you either reconcile or you adjust. Right, so where do we adjust? T account, general ledger, and journals. That's where you can adjust, depending on what they give you. If they give you a question just with the T account, you'll just adjust the T account. If they give you the journals, you adjust the journals, and the journals will ultimately affect the T account. Okay, in the bank statement, what do? There's mistakes there. You reconcile, and then you create an amount, an item on the bank reconciliation statements. Okay, so that's what you do. So that's the purpose of a bank recon. Okay, so now we can go and we can answer the question. To ensure that transactions have been omitted from the cash book. If I omit transactions from my cash book, that's my records. I'm going to adjust my books. I'm not going to touch the bank recon because the bank recon is the bank statement. So A is out. B, to establish the value of unprocessed checks. That could be true. Why? Unprocessed checks means what? Unprocessed?
Unpresented.
Or unpresented. Unpresented checks. Okay, what is an unpresented check? Unpresented check means it's an outstanding check.
Wouldn't outstanding transactions also be the same thing as outstanding checks? Transactions could be sales or receipts.
Yeah, well, it could be an outstanding deposit or an outstanding check. So here they just said unpresented checks. So unpresented checks would be checks that we haven't given them. Okay. C, to explain the differences between the cash book balances and the bank statement balance. To explain the differences between the cash book. So the cash book has balances that we have there, and the bank statement doesn't reconcile, but then we would need to know which is correct. Is the bank's books correct or our books correct? Then you'd either adjust or reconcile depending. And indeed, to find out if any checks had been dishonored. Okay, dishonored checks would be in the bank statement. Where do dishonored checks go? To the journals. Okay, to the CPJ. CPJ records check RD. Okay, so A is out, D is out. It's B or C. Okay, the interpretation is a little bit vague because unpresented. So let's write down B and C and let's discuss both. Okay, so B says to establish the value of unpresented checks. That's what B says. Okay, C says to explain the difference between the cash book, okay? The cash book balance and the bank statement. To explain differences with the cash book and the bank statement balance. Bank statement balance. Okay, so that's what they've said. So let's look at each one. Alright, so if I have an unpresented check, the problem is unpresented, what does that mean? What do you think it means? Let me ask you rather, and I'll tell you what I think it means.
What are you asking for? Unpresented?
Yeah, so let's just look at that option. Omitted. Okay, unpresented, so checks that we've written that we haven't given to the bank or given to our suppliers, or checks that we've given to them but they haven't processed. Which one?
I don't know.
Okay, so it's vague. Unpresented could mean either or.
I think omitted. Unpresented meaning not there, so meaning.
Yeah, but not there. Yeah, I agree. Unpresented means missing, but missing from whose books? Missing from the bank, meaning the bank hasn't processed the check, meaning we've given them the check, but it hasn't been processed. Okay, because if that's the scenario, okay, if we have given checks to the bank, then those are outstanding deposits. Outstanding deposits would definitely be on the bank reconciliation statements, bank recon statements, 100%. Okay, that's one option. Okay, another option, if these checks were issued to suppliers and not presented for payment by the supplier. So let's say I'm paying a supplier. Right, I'm going to pay the supplier by check. So I'm going to write out a check and I'm going to give them the check. Okay, if I give them the check, what are they going to do? Deposit the check. If they don't deposit the check, what is that viewed as? It's viewed as an outstanding check. And that's scenario. That's scenario 2. Right, so both will be in the bank recon. So far, that's looking good. Okay, because of those two discussion points. Okay, because again, they can change it slightly and then you'll have to interpret it. So I'm just giving theory that we've looked at before. Just to put a note here, outstanding payments. Outstanding payment or check. Let's use the word check because that's what we did in the workings. Okay, that would go into bank statement, bank recon statement as well. Okay, so nothing changes there in terms of the approach statement. Right, so I like B because B covers both scenarios. A scenario where I've issued a check where the supplier hasn't presented it for payment.
C for B.
B, to establish the value of the unpresented checks. C is to explain differences between the cash book and the bank statement. See, with this one, that's a bit of a vague statement. Why is it vague? Well, this is why. If there are differences in our books that are correct, then you don't change your books, because then you need to wait for the bank. Then that'll be scenario at the top here, these two. Okay, meaning I wrote out a check, which I supposed to, and then I gave it to the supplier, they just haven't banked it. Right, so those differences, if they're correct, then if the bank hasn't processed it, then it's a bank reconciliation statement. Okay, definitely. Right, but then the other scenario is differences. So now here's the difference. What happens if the bank has, or the bank statement has, a balance of let's say 100 for a debit order. Okay, let's just say that's the scenario. Okay, so now whose books are correct? The bank. The bank has a debit order, so the bank has processed the payment. If the bank has processed the payment, do we? Yes, we do. So what do we have to do with that? We have to adjust in our books. Okay, so you wouldn't affect the bank reconciliation statement, because that's an adjusting journal entry, not a reconciling item. Right, so C possible, but C is vague, because differences could be a difference in our books or a difference in their books, and then it depends on who's correct. Okay, and then once everybody's on the same page, then there's no problem. Okay, because then we know where the discrepancies are. Right, so B I like better than C, purely because B covers both scenarios, and both scenarios would both be recorded in the bank reconciliation statements.
6. The suspense account was opened to record the difference on the trial balance. The following errors were then discovered. First, a discount allowed of $2,000 had only been entered in the sales ledger control account. 2. A check for 1.5 paid for repairs had been entered as 5.1 in the repairs account. What was the opening balance in the suspense account?
Okay, errors that have been identified. Right, so we need to look at the errors, because what's the purpose of the suspense? It's to keep track of a missing debit or credits. That's all it is. Right, so let's look at each error separately, and let's look at the debit or credit. So let's go back. The first error was discount allowed. Okay, so discount allowed how much? 2,000. Okay, they tell you that the discount allowed of 2,000 had only been entered in the sales ledger control account. Okay, so only entered in the sales, was it journal or ledger? Sales ledger control account. Okay, so we know discounts allowed deals with who? Debtors or creditors?
Discounts allowed deals with debtors.
Okay, so if I'm looking at the debtors T account, this particular account, debtors, okay, so only entered in the sales ledger control account, meaning it was only inserted here in the debtors. Okay, meaning this account would have had discount allowed, and the discount allowed here would have been 2,000. Okay, because that's what they said. Right, so what did you leave out? You left out the credits for the discount allowed T account, because it's an expense. Okay, right, so there's the first one. Now we know what we left out. We left out a credit. How much? 2,000, because they told us that I recorded it correctly here in the sales ledger. That's what they said. Okay, so that's mistake number 1. Mistake number 2 was what? What did they say?
A check of 1.5 paid for repairs was entered as 5.1.
Okay, so a check, which is a payment. A check for 1,500 was recorded as 5,100. This is for repairs. Hey, yeah. Bracket for repairs. Right, so that's the mistake. So let's write down the mistake. So error and then correction. Right, so what should they have done? Let's do with that, because that's the easy bit. So debit, you would have debited what? What do you debit and credit here?
Don't know.
Okay, so what did you do? You paid for repairs, right?
Mm-hmm.
So what accounts are going to be affected if you pay for repairs?
Bank.
Yes. So repairs will be the expense increase. Bank will be the asset decrease. Right, so what should they have done? They should have put 1,500 there and they should have put 1,500 there. What did they do? They did that, but they just put the wrong amounts. Okay, so they put 5,1 instead of 1,5. That was the big mistake. That was the problem. Right, so if I can understand the mistake, I can fix the mistake. So we have more debits than we should. Well, actually, the amounts are correct in terms of, so the debits, let me just put a note here, the trial balance, the TB, still balances because both the debits and the credits were overstated. Fine, if you go back and you look at the theory, when are suspense accounts used? When do you use a suspense account? When you have missing debits and credits. Am I missing a debit or credit here?
Yeah.
No, I'm not. I'm not missing 5,100. I have 5,100, but I have 5,100 for both accounts. Right, so I've captured too much. I don't have a missing debit or credits. So the suspense account wouldn't apply to this error. Why? Because the error was captured correctly, but just twice. So the trial balance was still balanced. Okay, so we do have more debits, but this is it's a separate correcting journal entry to fix the overstatement. Right, so that one wouldn't affect the suspense. So the suspense would just be for 2,000. Okay, so we've got, what is the opening? Okay, the opening balance, and then we've got number. What else did they give me here? Yeah, what was the opening balance of the suspense account? So they've got 1,600 or they've got 5,600. 1,600 or 5,600. Okay, this is wrong. They want you to, okay, this is, we can go back to the textbook and we can show it. Suspense account only shows missing debits or credits. Okay, bracket used when the trial balance does not balance. Okay, so this transaction you wouldn't include. Okay, can I have a textbook? We can put a reference for it.
So what would the answer be? Is there no answer?
Well, there is an answer, but they're not using the correct the correct approach. Okay, because suspense accounts that don't affect the trial balance don't get included. Here's at page 79, chapter 11, suspense accounts. Okay, so just to put a textbook reference. See, they're using a suspense account. Let's see what they say here in the textbook in terms of theory. I'll read the definition. Do they have a definition? No, they don't. Right, so there's a paragraph here. See, here, when the trial balance fails to balance, the difference between the total of the debit side and the total of the credit side is placed in a temporary account called a suspense account. That's the answer. Okay, page 79. Okay, this one you can highlight to them. Tell them to look at page 79. Okay, this error will definitely be recorded in the suspense because we spoke about it. What did you do? You recorded this, you left out the credit, 100%. So 2,000 will be in suspense. Okay. Right, so I'm looking for an option there that was 2,000. This was a missing credit, so you would have had suspense of a debit. So you have the right option. See, debit 5,600. 5,600 is probably including the difference here. Okay, so if I work out the difference for this one, okay, just to make it clear though, this...
What would be the difference of this 5,1 minus 1,5 is 3,6?
Yeah, that's what I'm saying, but it's not correct in terms of...
1,6.
Yeah, that's how they're getting that option, but that's not what you're supposed to do, because the trial balance, if the trial balance doesn't balance, then you have suspense. That's why I'm using the textbook as a reference. Okay, we can go back and we can even look at these examples. Right, see, a suspense account only exists when you have a trial balance that doesn't balance. Yeah, I would still choose the debit. See, like that one. Here's an example. Okay.
Okay, would you still choose 5,6 debit?
Well, I would have to adjust for this, which you shouldn't, but that's what I have to do. Okay, so to get an answer on their past paper, you would have to work out the difference here. Okay, so what is the difference here? The difference is 5,1 minus 1,5 gives you, let's see, 5,1 minus 1,5 gives you 3,600. Okay, so I'm looking at this. What is overstated here? Your debits. Your debits are a little bit too much because you left, well, you didn't leave out anything. You just processed the wrong figure. Okay, you recorded 1,5 instead of, no, you recorded 5,100 instead of 1,5. Okay, so you recorded a bigger debit than what should have been recorded. Okay, so if that's the case, you recorded too much debits. Too much debits. That's basically what happened. Okay, so debits overstated by 3,600. Okay, because that was the difference. Okay, but yeah, again, you shouldn't be including that in the actual answer because, as I said earlier, here, suspense account, that definition tells you when a suspense account is used. Okay, a suspense account is only used when you have left out a debit or a credit, not when you've captured the wrong amount. Because if I've captured the wrong amount, see, that's the main reason why we don't put it in. The trial balance still balances. Okay, the suspense account is only used when the trial balance does not balance. Okay, if the trial balance does not balance, then you've got an amount in suspense. Okay, so for example, let's assume that I didn't make this mistake. Okay, would the trial balance balance perfectly? Yes. It just would have been 3,600 too much, that's all. But the trial balance wouldn't have had any suspense because the debits are 5,100 and the credits are 5,100. Okay.
So what answer are you going with?
So if I had to choose an answer based on an incorrect application of the suspense account, then I would have to say that if the debits are too much and you had 2,000 in suspense because you left out a credit, because you processed a discount allowed off, discount allowed, you left out the, I wrote credit here, left out the debits. Then I would go with what you circled, 5,600 debits. Okay.
Okay, 7. Inventory costing 1,2 had been damaged. It would normally be sold for 1,8. It can be sold for 1,7 if repairs were undertaken at a cost of 600. To replace the inventory, it would cost 1,000. At which value should the damaged inventory be shown in the financial statements?
Okay, so remember this was theory, hey, lower of cost and net realizable value. NRV. Okay, that's theory that you need to remember for inventory. Okay, it's recorded at the lower of cost and the net realizable value. So what is the cost? Well, let's go back and reread it. Inventory costing 1,2. Okay, so we got the cost. We just need the net realizable value. Okay, to get the net realizable value, it had been damaged. So they said it would normally be sold for 1,8. So normally, that's the selling price. Okay, so normally sold at 1.8. Okay, but that's the selling price, SP. Okay, we don't use that. Okay, that includes the markup. What is the next part? It can be sold for 1.7. Okay, sold for 1.7. If repairs are undertaken at a cost of 600. So it can only be sold for 1.7 if repairs are made. Okay, so do you agree, if the repairs aren't made, what is the inventory worth?
1.1.
Yes. Okay, because the 1.7 is with repairs. So 1.7 less repairs of 600 equals 1.1. Okay, so lower of cost and utilizable, 1.1. Good.
Okay, a company's trial balance showed trade receivables of 14,600 and an existing provision for doubtful debts of 470.
Yeah, this looks like an adjustment, yeah.
It was discovered that the trade receivables included an irrecoverable debt of 500. A contra entry of 400 has been made. The provision for doubtful debts is to be maintained at 5% of trade receivables. Which amount for doubtful debts was charged to the income statement?
Okay, so that's a nice, simple, easy one. You just have to work out the adjustment. Okay, so trade receivables beginning of the year, trade receivables at the end of the year. Okay, we need those two figures because we're working out a provision. Right, so they said a company's trial balance showed 14600. Okay, so 14600 is what I've got. 14600. And an existing provision of 470. Okay, so existing provision. Existing provision, we read it, 470. Okay, so company has a trial balance showing trade receivables of 14,600. We got that. Provision is 470. Fine. Okay, it was discovered that the trade receivables included an irrecoverable debt of 500. A contra entry of 400 was also to be made. Okay, so there's two things. Let's deal with the first one. Right, in this 14,600, we have bad debt, so remove it. Less bad debt.
Wouldn't you add bad debt?
No, you wouldn't add bad debt because bad debt is writing off a debtor. So trade receivables is your debtors. So they said that the trade receivables included an irrecoverable debt. Including an irrecoverable debt means you're not going to get it. So minus 600? No, 500. Okay, then the second part, a contra entry of 400 was also to be made. A contra entry of 400 was also to be made. They didn't tell us what the contra entry is for, but they say there's a contra entry of 400. Okay, they don't say what that's for. Right, then they say the provision for doubtful debts is to be maintained at 5% of the trade receivables. Okay, so I know that there's a contra entry of 400 to be made. So if it's a contra entry means the, so for example, when you have, let's say, bank and debtors. Okay, so if I receive money from my debtors, I debit the bank, I credit the debtors. The one is a contra entry for the other. So now, my question would be, what is the contra entry? Because then I would know what the debit and credit is. What is the contra entry? A debit, question mark, or a credit, question mark. Okay, they're not specific enough. They should have said a contra entry of something. Okay, so we need to provide for that when we do the working. Okay, what we can do though, is we can look at the 5%. Okay, so this provision, the new provision, is going to be 5% of the balance, whatever the balance is. Do you agree? Okay, so now the problem is we don't know if this contra entry is a debit or a credit, because a contra entry could be lots of different things. Right, so now I need two different options. So option one let's assume the contra entry is a debit. If it's a debit, what are we going to do? We're going to subtract, no, we're going to add, because trade receivables is an asset. So we'll add 400. Okay, so let's add 400. What do we get? Let me just write that there. Add 400. Or option 2, if we assume it's a credit, then you would minus, subtract, less 400. Okay, do you understand why we're doing that? It's because the contra entry isn't specific. So we need to do 2 options. So this minus that, so minus 500, then add 400, so plus 400. Okay, would give me that, 14,500. Then, if I do the same thing, this minus 500 minus 400 gives me that. So you can see you've got 2 possible answers. Okay, so the 5% I'm going to apply now. Okay, so what is 5% of this? Let's work it out. Times 0.05 is that. What's 5% of this? Let's check. 0.05 is that. Okay, so those are my 2 possible options. Okay, so if I go with this option, if the contra account is a debit, then I'm going to have to adjust. I'm going to have to increase the provision by whatever the difference is. This minus that. Okay, so they increase the provision by 255. Okay, if I go with this option, if I assume that the contra account was a credit, then I would have had a provision of 685. So then I would only increase the provision by 685 minus 470. Okay, so do we have an option for 255 or 21? Which one?
685.
685. What did they want? Did they want the adjustment or the provision? The provision for doubtful debts. What amount for doubtful debts was charged to the income statement? Okay, see, charge the income statement. This is what you charge the income statements. Okay, because that would have been the adjustments. Okay, you would have debited the bad debts. Okay, and you would have credited the provision because you're increasing it.
So you had 215, is that right?
Yes. So it's either or, again, depending on the contra account. Okay, they didn't specify if the contra account was a debit or a credit. Provision for doubtful debts. Okay, so by process of elimination, we could choose option 1, or A, hey? Yeah, because there isn't an option for 255. So now I know, now we can go back and we can say, this contra was actually a credit. Okay.
Okay, I just need to run to the bathroom.
Okay.
To get the phone call first.
Yeah, I'll. Okay, so yeah, question 9 again. Here they just said errors. See, a business does not maintain control accounts as part of the double entry books. The examination revealed the following errors. Here they said the purchaser's journal was undercast by 100. Okay, so when you see the word undercast means too little. If it's too little, that means that this transaction, debit, purchases, credits, should have been more, not less. So the debit and the credit are too low. If the debit and the credit are too low, have you left anything out? No. Trial balance, TB, will still balance. Okay, so there wouldn't be a discrepancy. It's just too little. Error 2 said what? The sales invoice entered in the sales journal was entered twice. So you did this. See, here's it. Debit, debtors, credit sales, debit, debtors, credit sales, but you did it twice. You only should have done it once, but you did it twice. If I did it twice, then both the debit and the credit would have been 180 too much. Okay, so again, this question, errata. Okay, because there wouldn't be a difference in the trial balance in terms of the debit or the credit being more. Why? Because if you've overstated it, okay, both debits and credits are more than 100. And in this case, both are more by 180. So again, the question's not correct. The question's a problem.
Yeah, which one would you go?
I wouldn't go with any option. My option would be this. Both transactions or both errors have a debit and a credit that balances. Right, so that one I can't choose an answer. The answer would be it doesn't affect. Okay, unless they tell you more specific. So see, here's the thing. If they told you, did you leave out the debit or did you leave out the credit, then I can answer it. Okay, the thing is they just said it's overstated or it's undercost. Right, they said the purchase journal was undercost. Undercost means too low. Undercost means you left out 100.
So number 10, then a trader has prepared a draft income statement for the year showing...
Yeah, I've looked at it already, so I'll just check your answer. Here's the feedback. So here, in terms of closing stock.
Okay, I can't remember the question. Let me just quickly read it. Gross profit of that, we discovered the following areas. Closing inventory had been overstated and sales returns of that had been treated as purchase returns. What was the correct gross profit? Okay.
Okay, so the first thing was closing stock. What is wrong with the closing stock?
It was overstated.
Exactly. So now I'm dealing with that here. See, cost of sales has a formula. Closing stock will affect cost of sales. If cost of sales is overstated by 250, that means you're going to subtract more closing stock. If I subtract more closing stock, I'm going to have less cost of sales. If I have less cost of sales means more gross profit. Okay, so that means overstated. So that's the problem with that one. Okay, so the effect here would have been the gross profit would have been overstated by 2,500. Okay, they wanted the answer, what is the correct gross profit? So if the gross profit is overstated, I need to subtract it. Okay, minus 2.5. Just to go through that again, closing stock. They told you closing stock was overstated. So if I overstate closing stock, have a look. If I make this bigger, I subtract a bigger cost of sales. Okay, means the gross profit is smaller. So to reverse out the error, I need to add it back. Okay, so more gross profit because, okay, let's just go through that again. Overstated means too much. Too much. Closing stock was too much, so I subtracted too much. If I subtracted too much, I made cost of sales too small when it should have been more. Yeah, so you're subtracting. Okay. Right, then the sales returns. Okay, sales returns of 400 have been recorded as purchases. So there's the error. There's the mistake. Okay, do you agree a purchase return is going to do what to your gross profit?
Increase it.
No, the purchases returns would affect this. Would affect the cost of sales. Okay, so now I'm looking at that part. Right, so there's the same formula, purchase returns. Okay, so if I've recorded purchase returns at 400, what is that going to do to my cost of sales? Let's write it down. Purchases returns, more. So if purchase returns is more, that means I'm going to subtract a bigger amount. If I'm subtracting a bigger amount, cost of sales is too little. Less cost of sales. Okay, so there's less cost of sales, that means there will be more gross profits. GP.
So would it be plus 400 or minus 400?
You'd have to minus 400. So minus 400 for that bit. Then we still need to look at the sales returns. What does the sales return do to my gross profit? Sales returns will affect the sales. So sales too high. Okay, sales is too high because I don't have the minus sales return. So I need to subtract 400 for the missing sales returns. Okay, so there's all the workings for that one. So you would have to subtract another 400. So the correct profit figure would be the 64 minus all of those, 60,900.
Okay.
Gross profits.
Business, so 11 says the business paid 5,750 during its trading year for advertising. This amount included 500 rand in respective of the next financial year. How could the correct treatment of the 500 affect financial statements? Profit for the year and net current assets.
Yeah, so it's again, you're looking at errors, hey? You're looking at mistake that took place. Right, so let's just go back and analyze each one. The first one said, a business paid, okay, so a business paid 5750 during the trading year for advertising. This amount included 500 in respect of the next financial year. So what is that? That's recording more this year when some of it relates to next year. So what is that?
Prepaid.
Yes. Okay, so debit, prepaid expense. So it's actually an adjustment more than an error. Prepaid expenses. Credit the, what expense was this? Advertising. Advertising. Okay, so there's it. The business paid 5750 during the trading year for advertising. The amount included 500 in respect of the next year. So how would the correct treatment of 500 affect the financial statements? Okay, so we would have to process a debit of that, which is an assets and advertising expense.
So
profit for the year would have been, or would, the expense is credited. So you reduce the expense, which increases the profits.
And then the net current assets will decrease.
Prepaid expenses. Prepaid expense is a non-current, no, is a current asset, so that would increase. So current assets, CA, will increase.
Net current assets
would also increase. Net current assets is the same thing because you're just minusing current liabilities. Okay, so profit for the year, increase. Profit for the year, net non-current assets, increase. Both increase because of that. That's the working. Yeah, you need to do workings for these. I don't know, how did you get that answer? Did you think about it? Or?
I did do workings.
Okay, that's good. Yeah, so just check and review that just to make sure. Okay, next.
A statement of financial position at the 31st of December showed the following. What were the owner's drawings? This one I didn't do.
Okay, so drawings, where do we get the drawings? What formula do you need for drawings?
I'm not sure.
Owner's equity.
Okay.
Owner's equity has drawings. Capital plus profits / loss or minus loss, depending what it is, minus drawings. Okay, so what did they give in the question? They gave you net non-current assets, trade receivables, inventory, trade payables, bank. And then they gave you capital. And what else? And profit for the year. Okay, so they did give you the profit for the year. We need to get the owner's equity. Okay, so let's get owner's equity, OE. What is OE also equal to? A minus L. Right, so first things first to get owner's equity because we're missing information to work out drawings. Alright, so I know what the formula is for owner's equity. I just need the owner's equity. I know what the capital is, I know what the profit is. I just don't know what the drawings is. Okay, I've got two unknowns. Right, so what are all my assets? Non-current asset, 18,000. Okay, so there's one, 18,000. Trade receivables is an asset, plus 3,000. Inventory is an asset, plus 1,800. Trade payables is a liability, minus 3,600. Bank is an asset? No, bank is actually a liability because they said in brackets credit. They said bank 350 credits, that's a liability, minus 350. Right, so add and subtract all that stuff to get the owner's equity. Owner's equity, that. Okay, so now I can go back and I can fill in a blank that I didn't know previously. Owner's equity is 18850 equals. Do I know what the capital is? Yes, 19,100 from the question. Do I know what the profit is? Yes, 9,200 from the question, minus drawings. Okay, then you just do maths and you find the missing figure. Drawings equals. Okay, 9,450.
And where did you get the 19100
From the question.
Okay, yeah, sorry.
Where did I get the capital? From the question, yeah. It's given. So things that are given, you can just include. Things that you haven't been given, you need to work out. Owner's equity had to be worked out because it wasn't given. Make sense?
Okay, a trader received 15,000 rand. $15,000 from his credit customer in the first year of trading. At the end of the year, they still owed $600. Payment to credit suppliers was $3,000 and $500 was owing to them at the end of the period. There was no closing inventory of unsold goods. What was the gross profit for the period?
Okay, thoughts?
I don't know.
Okay, what is gross profit? How do you get it?
Comes minus expenses.
No, that's not gross profit. Sales minus cost of sales. Sales minus cost of sales gives you gross profit. So that's what they want. What was the gross profit? I need sales, I need cost of sales. Did they give that to you? No, but they gave you information to get it. Okay, so let's go back and we need to find sales. Where can I find sales? Which tier account is going to give me sales?
Sales.
Well, yes, if you knew what the sales were. Did they give you sales?
No.
So what other account will give you sales?
Not sure.
Trade receivables. Okay, trade receivables, trade payables. Right, so they've given you clues in the question. Right, the clues in the question was, if you read the question, there's hints that you're looking at debtors and creditors. Right, so now we need to go back and we need to find those missing figures to get the right values to work out the gross profits. Okay, so let's start with the first line. What does the first line say?
They can read it again.
A trader received 15,000 from his credit customers. Who did that affect, debtor or creditor?
I'm sorry, I wasn't listening.
A trader received 1,500 from its credit customers.
Yeah?
Who does that affect, debtors or creditors?
Debtors.
Credit or debit? Where do you put a receipt for a debtor?
No, debit side.
A debit would increase the asset. Where would you decrease the debtor?
This side.
On the credit side. Okay, so bank will go there. They tell you that that amount was 15,000. Okay, then they say at the end of the year they still owe 600. So at the end of the year they still owe 600. So that's the balance at the end. Balance carried down. Balance brought down. Okay, so that's what I've got. That's what they said. Right, that's all they said. That's line number 1. Okay, line number 2, payment to creditors. Credit suppliers, which are creditors, was 3,000. So if I'm paying my creditor, I'm going to decrease the liability. So they tell you that that's 3,000. And 500 was owing to them at the end of the year. There was no closing inventory of unsold goods. Okay, that's just additional information, meaning you sold everything that you bought. Okay, so 500 is still owed by them, so we need to put that in. Balance there, balance here. 500. 100. Right, so now they want to know what the gross profit is. You just need to complete these T accounts. Okay, so where would you expect to see sales here in the T account for trade receivables? Where would sales go in this T account for this?
Where would sales go in trade receivables? Is that what you're asking? Would go on the debit side.
Okay, so that's what we don't know. Alright, so it's literally just to complete the T account question. Okay, you would probably see a opening balance here, but they didn't give you any opening balances. Okay, it's just multiple choice. So obviously, if there was more information, you could add more things to this T account. This is not everything that goes into the T account. Okay. Alright, so then you just find the missing figure. This plus that. Assuming no opening balance, 15,600 would be the sales. Okay, and then the same thing here. Assuming no other transactions, okay, you would expect the cost of sales to be the same thing, the sum. Okay, so what's gross profit? We spoke about it earlier. Let's highlight the formula. Sales minus cost of sales. So GP equals 15,600 minus 35 equals. Okay, no opening balances here, so you wouldn't have to provide for any of that. Okay, 12,100. 12,100 is there. Okay. Okay, the next one is looking at a profit calculation relating to partnerships.
Okay.
A and O are in a partnership. The following information has been extracted from the current accounts. Okay, so we have information relating to what? Current accounts for two partners. So let's draw that up. Okay, so they said this was the current accounts. Okay, all right. So actually, let's do it using. Okay, there's two ways of doing it. I'll do it both, and then you can see which way you prefer. And you can do whichever way is easier for you.
Maybe just do one way so that it's not so confusing. Just do one way.
Well, one way doesn't always help because sometimes they can ask for T accounts, and then you need the T account. And if they ask you for this, then you could have done it either or. So I'm going to show both, and then you can decide which is easier or which is applicable. Okay, so in this scenario, I can do it two ways. If it was a different question and they ask for a T account, then there's only one way of doing it. Okay, so here they said we've got two current accounts. So actually, I need to label these. A, Abdul, and Omar. Okay, so let's show what they've given you in the question. Balances at the first. Okay, so obviously current accounts. Abdul has a debit balance. So Abdul has a debit balance. So that goes there. At the start, 2,000. Okay, Omar, credit balance 3,000. So balance 3,000. I'm just putting in what they give you in the question. Then they said drawings for the year. Okay, so drawings for the year would decrease their current account. So drawings would go on the debit side. Drawings would go there, drawings would go there. Okay, how much did they draw? Abdul 15,000, Omar 18. Okay, then they say that the balances at the end of the year is a credit for Abdul. So now Abdul has a credit balance. So that balance is actually on this side now. Balance brought down, balance carried down. Balance of 1,000. 1,000 there, 1,000 here. Okay, they also say that Omar has a debit balance of 4,000. So now his balance changes from a credit to a debit. 4,000. Okay, balance brought down, balance carried down. Balance carried down, 4,000. Right, so that's what they've given you in the question. Then they say, what was the total profit for the year end? Okay, what is profit going to do to their current accounts? Exactly. So profit would have been here. So this would have come from profit and loss, or appropriation actually, because this is a partnership. Okay, so that's what you're trying to find. Okay, so let's balance these accounts off. Which side's bigger here? This side is bigger, so sum up all of that. Gives me 18,000 on that side. So 18,000 will be the one amount. Okay, that's the share of the profit. Okay, that's what Abdul gets. To work out what Omar gets, same thing applies here. Just add up we'll balance the account off basically. Okay, so 18 minus 3 minus 4 gives us 11. So 18 plus 11 is 29. Okay, you had the right answer, that's good. Okay. You could have done that in this format. Okay, so line by line. You could have said opening balances like this, just to show you the other way of doing it. Okay, opening balance would have been the total. So opening balance for these would have been 3,000 minus 2,000. Okay, opening balance, that's both. That's 3 minus 2. Okay, then you would have said add profit, which would have been a question mark. You would have had less drawings. The drawings would have been the total. So what is the total here? 15 plus 18. Okay, so 15 plus 18 is 33 equals. Right, and then what else happened? Closing balances, and then obviously, then you've got closing balances, and that was given. Okay, so closing balance, let's just add them. It'll be a debit, so it'll be a minus balance. It's minus 4 plus 1. Okay, so you would have shown that. Then you would have worked out the missing figure, basically. It's the same thing. You're just adding everything up. Alright, so to find this figure, to get the profit, minus 3,000 plus 33 minus 1. Same answer. Okay, so that could have been used for this one because this question was a multiple choice. But if it was a different question, if they specifically asked for a balance, let's say they asked you for Abdul's share of the profit, then there would be no other way of doing it other than working out that way. Okay.
Says J, H, and P are in partnership. The profit for the year was 80,000. J is entitled to the partnership salary of 5,000. They share profits in the ratio of 2 to 1, but P is granted a minimum earnings of 20,000. Which total profit share would J receive?
Yeah, so again, you could draw up a T account for this if you wanted to, just to analyze J's profit. Okay, because J's profit would go where? On this side again. Profit and last question mark. Alright, so they said J, H, and P on a partnership. The profit for the year, let's write that down. Profit for the year was, how much was it? 80,000. Okay, then they said J is entitled to a salary. Okay, so if he's entitled to a salary, that's going to increase his entitlement. So salary here, 5,000. Okay, they share profits in the ratio 2:1. Okay, so if it's 2:1, let's write this down. JHP is 2:1. 2:1. Right, therefore J gets 2/5. Yeah, 2 plus 2 is 4, plus 1 is 5. So yeah, 2/5. Okay, but P has guaranteed minimum estimates of 20,000. Minimum earnings of 20,000. That's for P. But now they're talking about, oh, JH and P. What did I? Yeah, I did write on JHP. Okay, yeah, that's fine. Okay, salaries there, profits there. Okay, let's work out the share of the profits. Okay. P has guaranteed minimum earnings of, okay, that wouldn't apply because guaranteed just means that you are going to generate 20,000 profit earnings. Okay, the profit was more than that, it was 80. So the share of the profit that the owners would get would be a share of what they actually make. So 80,000 times 2/5. 80,000 times 2/5 is 32,000. So now I can put that in. Now I know what the profit is for J. J gets that figure. Right, what else did they say here? You've got it.
What is the total profit share for J?
What is the total profit? Oh, well then that would be the answer, 32,000. Okay, so they didn't want to balance anything else. So salary was actually, you could actually ignore.
So you just have to take 80 minus 5,000 and then 2/5.
The salary was what he was entitled to. That was the profit for the year. J is entitled to a part-time salary. Okay, you could take the salary into consideration. Just an asterisk. If the salary was not taken off the profit, then you would have to take it off. Okay, so you're right by saying that you could take off the profit. So if you want to take it, because I do agree that you shouldn't leave out salary, you should include it. But then if you do, you're going to have to say, well, then you need to pay out the salary first before the distribution of the profit. So let's show that. Okay, so then if we take off profit first, take off salary first, then yes, then you would change it. Then it would just be 80,000 minus 5 times 2/5, which is correct. Okay, so yeah, that's fine. Okay.
Which gives an answer of?
Let's see. It's 30 there. Okay, see, 30 is not there. So then they haven't taken off the salary, yeah. Okay, so just be careful how they word it. Alright, so yeah, again, vague question.
Okay, X, Y, and Z were partners sharing profits and losses equally. On the 31st of March 2014, Z retired and the net asset valuation showed a loss of 15,000. Unrecorded goodwill was valued at 30,000. What was the net entry in Z's capital account?
Okay, so this is that whole ratio thing, right? So X, Y, Z. Okay, they're sharing equally, so a third. Right. On 31st March, Z retired. The net asset valuation showed a loss of 15,000. Okay, so asset valuation. Loss of 15,000. Okay, they said unrecorded goodwill was 30. Okay, so we need to record that as well. Goodwill, 30,000. Okay, what else did they say in the question? That's it. They said, what was the net entry in Z's capital account? Okay, so we're looking at Z. Okay, so did they give you the opening balances? No, they didn't. They want to know what the net entry. Okay, so net entry. So the asset valuation, it's a loss. How will a loss affect their capital account? It would decrease the capital. Okay, so decrease capital. Alright, so if you decrease capital, you're going to debit capital. Okay, and then you would have debited by a third. 15,000 divided by 3 is 5. Let's just check. Yeah. Okay, and the goodwill. Goodwill is, they said, was it unrecorded, hey? Yeah, it's unrecorded, meaning he should get a share of it. So allocate his share of goodwill. Okay, what's a third of it? 10,000. 30 divided by 3.
And why did you say debit 5,000? Where did you get that from?
Well, what if your assets are worth less than what they actually are? Yeah. Is that going to increase or decrease your capital?
Increase. But then why did you say 5,000? I don't know where you get the 5,000.
5,000 is Z's share.
Oh, okay.
Z is a third, a third.
Okay.
Then that's divided by 3. So it's a third over here. That's a third, that's a third, that's a third. Third. That's Z's share. Okay, so allocate his share of the goodwill. Goodwill will increase. That'll increase his capital. Obviously, goodwill is good. Right, he creates it, so he gets it. So that would have been plus 10, and that would have been minus 5. Okay, so the net effect would have been difference. Okay, so net effect is plus 10 minus 5 equals plus 5. Okay, so plus 5 for his capital would be a credit. So you would credit his capital. Credit a capital 5,000 net effects. Okay, so that's just applying what he gets. He gets goodwill and he has to take a share of the loss.
Okay, perfect. I'll have to mark the rest of the memo because I have to read it somewhere.
Okay.